are listening to Real Estate Today. To reach Deb tomorrow or with questions and comments about the show, please send an email to Deb at realrealestatetoday.com. That's Deb at realrealestatetoday.com. Now, back to this week's program.
All right, welcome back. And we are continuing last week's show of our world famous homebuyer seminar. Last week, we talked about the first part of preparing to buy a home. So we've broken this down into 5 steps. Preparing to buy a home is step 1. And then the search, the negotiations, the pending process or escrow or contract, under contract, all different names, and then the closing process. But honestly, we're going to spend 2 shows on the first step because that's how freaking important it is. And everybody wants to skip to step 2, which is the search, because that's the fun part, because you get to look at the pretty pictures of all the houses, but you're going to fall in love with one and you're not going to be ready to buy, and then you're going to cry. And there is no crying with Deb. That's my mission statement. That's how I base my business.
Ever.
That's not true. I cry all the time. All the time. But anyways, so last week we got through the first part of preparing to buy a home, which was picking a realtor. But we're going to continue on with that because we've also got to talk about getting your financial house in order. So that's what we're going to talk about today. So here we go. You ready, Karen? I told you it's all about you today.
I think I'm ready.
Okay.
Throw it at me.
All right. So picking a lender is very similar to picking a realtor. Some of the advice that we gave last week in terms of picking a realtor is going to stick with picking a lender. I do think one of the best places to go is to ask your realtor for advice. The reason being that the realtors know if they do, significant business, they know who gets the deals done with the minimal stress. Would you agree with that, Karen?
I would agree with that statement.
Do you have other suggestions on how people could locate a realtor?
Lender.
A lender.
Yep. Okay, I know you
it's all about me.
I mean, a lot of people do go online to look for lenders, and I don't know what word searches that they're using, but typically anyone can do that with anything. So if you don't have a realtor already, I would ask coworkers, family, friends, anyone that's recently gone through the process, who did they use, what did they like about him, and I would start there because you can always find anything online.
Yeah. I certainly have my preferences about using more local oriented people who have a stake in the community. That's a big factor for me. Other reasons too. But one of the questions I get a lot is, well, I'm just going to go to who I do my banking with because it's easier because they already have all my information.
I hear that a lot too.
Yeah. Mm-hmm. Is that true?
Maybe they have their information, maybe they don't. It just depends the nature of their relationship with that bank. And having worked for a bank and did mortgage loans, it just depends. If these are business owners, then yes, chances are we had all of their financials, but not always. If you just have like a checking and a savings and, maybe a
They're not going to have your tax returns. They're not going to have copies of your pay stubs. They're not going to know what your credit card payments are every month. So it's pretty much, my opinion is for the most part, it's pretty much like starting from scratch. So there's not a huge benefit to going to your bank. I mean, certainly, I always ask people, where do you bank? And so, that certainly depends on what their answer is. Because there are some banks that I'll be like, no, you don't want to go there. But some I'll say, that's a good place to start. Here's another, option kind of thing.
And a lot of people may use their bank or financial institution because they have a relationship possibly with that person. Otherwise, they think that, okay, that's the natural step is to start at my bank.
Right.
Which I encourage people to, to shop around. And that would be a place to let another competitor,
Absolutely. So find a lender, and then what do? You say, okay, I'm going to go to so-and-so and find out about getting a mortgage. We talked about last week, one of the things I always do is I say, here's what you need to say.
Yeah. Usually they just say, my name is this, and my realtor referred me.
Yeah.
please help.
Yeah.
And then I go from there.
Yeah.
And I always ask, how do you want to proceed? Do you have questions first? A lot of people have a lot of questions. A lot of people just want to jump in and get something started. But I try to get a pulse for where they are with the process so that they're comfortable.
That's great. I'll remind you of the same thing that we talked about last week when talking with a realtor, that finding a realtor and asking them if they're willing to sit down and talk to you, and sort of fibbing a little bit and saying, I'm probably not going to buy a house until next year, even if it's not true, is a good way to find out if you've got a good realtor who kind of gets it, that they're not just looking for the low-hanging fruit. And I think it's the same thing with the lender. And I think that's great that you sort of try to find out where they are in the process. Because I know sometimes we get excited and you start sending, like I start sending them houses and they're like, oh, we're not there yet. And it's like, oh, okay, So it's good to ask that. So what are some factors that you need to consider when picking a lender? I think that interest rate is probably the first one that jumps out at people.
That is the first thing that jumps out at people. And a lot of lenders will say that's probably not the most important piece to it. And it could be, on a given day, like maybe our rates are higher than a local bank or credit union. But putting that aside, is you really want to know, who can get the job done? Who do you work well with? Who communicates well with you? Are they responsive?
See, just like a realtor.
Do I feel like they've answered all my questions? They're
taking the time for me.
They're taking the time. Absolutely.
Yeah.
So a lot of that to me goes into play, because depending on how long this process will be for a person, you want to at least like your lender a little bit, just to have some kind of, ongoing relationship that, hey, we're still looking or whatever.
Yeah.
I mean, I don't know. I just feel like that's where you tend to lose some things in email or through text messages. So definitely at least a phone call if you can't meet in person, just so you can hear the actual voice of the other person.
Yeah.
So,
and feel you need to have some confidence in your lender, just like you do for your realtor. You're making the biggest purchase you've probably ever made in your life, and you want to have confidence the team that you are surrounding yourself with. And we talked last week about interviewing your realtor, and it certainly can be the same thing in terms of the lender. The lender's kind of interesting too, because there are some other things that you have to take into consideration as well, which one of them is what loan programs that they have available. And that's why it's good to sort of have a little bit of a vision as to, what you're hoping to buy and what you hope that scenario looks like. Down payments are usually the biggest factor, in my opinion, in choosing a loan. We call them loan products.
Yeah, and that's how I typically will start. Like once I'll say, when we start to discuss the different loan programs that are available, I always start with down payment. My question is, do you plan on putting some type of down payment, regardless if it's your own money or coming from, gift funds or something? So I always start there.
Okay. But also what kind of home you're going to buy, because if it's going to be, sometimes condos have special rules, manufactured homes have special rules. If you were intending on buying land and building, that's a whole other ball of wax. So you want to have that idea as well. And that may go to a big part of how you choose your loan as to who can service what you want. Yeah.
Right. Not every lender has every single product available.
Yeah. And I've had some clients recently where I've had to kind of they've started with one lender, and then we've realized that what they want to do or what they need to do, because what they want isn't available. And so now we have to switch to, looking at a different kind of home. And so they've had to switch lenders in order to do that. And then closing costs is something to certainly consider. I don't think that maybe all home buyers realize, because it all kind of gets lumped in together, that it costs you somewhere between $2,000 and $4,000 typically to get a loan, to get a mortgage. And
I think that's a safe range.
Yeah. And so what are those costs and how does that compare? So I wanted to take a second to talk about APR. I think we've talked about this before. I know Karen's like, oh, God. Yeah. I'm not even trying to do the math for you, but APR is a really important concept to understand.
Right.
I believe that the lender industry has some government regulations where they have to provide you with these annual percentage rate numbers.
Yes, if we quote a rate, it has to be followed by the APR as well.
So what you're going to see is interest rate is, I know you're not allowed to talk about interest rates, but I am. Interest rate's 4.0% and the APR is 4.375 or something like that. And you'll be like, what does that mean? So what that means is that it is, well, let me ask you this. If a loan is at 5% interest rate and it's $2,000 in closing costs, or you've got another loan that's 4.5% interest rate, but it's $4,000 in closing costs. Which one's better? I don't know. I can't do that math in my head.
I know you're looking at me.
Right?
You wanting me to answer?
Right.
This?
Pull out your calculator. Be like, nobody knows that, and that's what nobody can do that math in their head, right? That's what the APR is for. So they pretend like that $2,000 in closing costs or that $4,000 in closing costs. They kind of, this is really simplifying it, but they pretend that it's interest and they roll it into the total cost of the loan over its lifetime, and then they spit it back out as an interest rate. And that's how you're able to sort of level the playing field and compare loans. It's just sort of giving you the total cost of the loan, which includes the interest and it includes your closing costs. So you want to look at that APR as a way. There's some APR calculators online, and I think I sent one to Rachel that she's going to post sometime this week with a little bit more information. If you really wanted to, this is an article. It's like, and create an Excel spreadsheet that blah, 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 blah. And I'm like, no, because honestly, again, that number's regulated by the federal government. Like they have to put that number out. So that's not smoke and mirrors advertising when they put that APR number out. So I definitely think that is a really good number to pay attention to. So those are the things you kind of want to look at when you're picking loans, your goal being to walk away with a pre-qualification letter or being able to get a pre-qualification letter very, very quickly. Because in today's seller's market, when you go to make an offer, you need to have that. It's a little bit different than a pre-approval. Mm-hmm. And a lot of people use that term interchangeably. In my opinion, pre-approval is a little bit deeper. Pre-qualification just means I've told the lender my information. They've looked it over and said, yeah, I think we can do this. Pre-approval means they've gotten copies of everything and they have really dug deep and probably gotten in front of an underwriter.
I will refrain from what I feel the definition is between the two, but yeah, I'm kind of on board with you. I mean, that's my personal opinion, but it is to me a more solid when you can see pay stubs that you have seen. You actually reviewed credit, because there are people who issue a letter without even looking at that.
So let me ask you one more question before we go to break, and we've talked about this before, but it comes up literally every day in my life. And that is, I don't want to go to a lender because they're going to pull my credit and it's going to hurt my credit score.
Well, my sarcastic answer is, do you want to buy a house now or ever? Sorry. Because eventually your credit's going to have to be pulled, and it's just part of the process, unfortunately. And it's better to, if you are going to shop lenders, do it within, I always say within that 5 or 7 business days of each other, so that all lenders were all looking at that same type of mortgage credit, the credit scores and everything, but it's part of it. If you tell me that you pulled your credit from an online service.
Yeah, or your credit company.
Yeah, so if you've told me that you pulled your credit from an online service, we can speculate, but I can't give you a definite answer if you're pre-approved or pre-qualified.
Yeah, you need to have a lender pull your credit because it's a specific algorithm for mortgages. I think the other thing I tell people is that whole thing about pulling my credit will hurt my credit. While it's true, it does have a little bit of an impact on your score. It shouldn't be enough to kick you out of the program unless you are so borderline anyways that it may not be the right time for you to buy a house. So it's better to know what's going on with your credit so that you can plan appropriately than to be afraid of a few points here and there.
Absolutely.
So get over that. I don't want to hear that anymore. All right, let's go to break, and we will come back and talk about choosing the best kinds of loans and talk a little bit more about closing costs. So stick around. You're listening to Real Estate Today, your home for smart real estate.